Hello again, people. Right, well, a couple of things. I haven't been making so many videos recently because I don't think that many people watch them, and it is quite time consuming, but I do find making charts and annotating them is a bit of a fag, so it's a toss-up whether to make videos that don't get watched or put pictures together that don't explain the trades properly. I mean, you can see the dilemma I'm in. So I started to create this one as an annotated chart showing this euro short trade. As you can see, what we've got going on here is a 15-minute reversal. I entered shortly before the histo alert on the 15-minute break and close. You can see I should normally be on the next bar, this bar entry, but I entered using the 5-minute, and this is the thing I can't portray when I have to do the images and then I make the videos, and not many people see them, which is a real shame. So I decided after all to make this video, and you know, we've got a downtrend here, clear downtrend. We had the 15-minute break and close that I mentioned just now. We are at 115 as opposed to 5-day average of 95. The 15-minute close there's the low, high, high, low, high, high. Here's the close, there's the pullback, there's the continuation. I'm in this down move. The old resistance tested as new support, and I fully expect now this to pull back. The EU, this is digging up rubbish from my past, as it were, all the information, does like to retrace 50% of the way, so you could stick a Fibonacci on here, big 15-minute uptrend, and it's potentially easily come down to this level. You can clearly see there is a certain amount of support here, so this looks like a no-brainer short. As always, the disclaimer: don't trade what I trade, and so on and so forth. And if I were expecting this to come down further, I would hope to see a break and close on the M30 at least. Now, the other thing that I couldn't explain on just pictures was the phenomena of entering the trade, choosing the best one to go for. And as we can see here, we don't get 15-minute reversals very often. In fact, all of this up move, there was no 15-minute reversal down. Once we get it, that's the signal, in my opinion, to capitalize on this overextended price move and take the short, which is what I did. Now the 5-minute, we can clearly see swing 1, swing 2, swing 3, swing 4 is the pullback, swing 5 is your impulse move, which is what I trade. Now the other thing I noticed about this was, if you were considering entering based on something over here, look what you've got. You've got a massive amount of price action above. It's not ready to go, the RSI histo I mean. Then all of a sudden price starts to look ready to go. We've got the trend in place, as I say. The earliest point I want to get involved in trading this based on the 5-minute is here. There's the pullback, here's the break and close. Look at how little interest there is above the 0 line, let alone getting above the 20 line like all this stuff here. It is just begging to go. And now look at all this red dropping below the 20 line, the minus 20 line, begging to go. So, you know, this thing is priceless. The 3-candle reversal, in my opinion, is priceless. Understanding price action, you know, we've got a 5-minute reversal to the downside here as well. You know, you've got your break and close. You could have got in early here for whatever reason. It's not the way I trade. But once again, we can clearly see momentum is dropping off. There's even a minimal amount of divergence. So you add the divergence to the overextension, as it were, the time of day, the end of the American session now. We're well past the end of the UK session, and look, this is going. I'm not interested in trading this while I'm making a video, but there's a perfectly good trade there, and as I say, it's highly likely to get down to this 50 level. We've got to get through this R1, but it's ready to go. And in my opinion, you can be certain, or pretty certain, that the English session, if you like, the European session and the US session will tend to want to pull back before the Asian session. Whereas if you're looking at an Asian pair that's going up, as happened the other day, it looked ready to go, it was overextended, and it didn't. It just carried on up because they were pushing it, in my opinion, and this is where sort of a little bit of discretion, common sense, call it what you like, comes into play. My opinion is they're pushing it up to a point to reverse it in the Asian session. This one, for whatever reason, it's the way I like to believe it, you know, this is going down. That's all there is to it. But the other thing I'd like to mention in this video, and I can't on Twitter and I can't really just on pictures, is I take multiple trades that I don't post because I've not crossed every I and dotted every T. Because I can read this thing, but I can't explain how to how you should read it. So if you're a novice to what I do, then I have to show you everything in a mechanical way. There was a situation with Joel, if you're listening to this, Joel, that GA trade for just short of 40 pips or 41 pips, I think it was. I took it late because I only noticed it after the event. I didn't get the optimum time to enter it because I was in and out. I think I'd made myself a coffee, went and sat in the sun, got ready to take the dog for a walk, looked at the charts, saw the perfect H1 RSI break and close, and took the trade. Because when you're getting involved in these trend reversals, as I've said many times on Twitter and many times in past videos, the price, because of the way these reversals work, they're actually exhausting, taking out, capturing into the market people in the wrong direction. So eventually they have to run out of that, and that is why trends are so good. People don't often describe them like that, but you are getting in because you're using the M15 trend and then the M5 trend. I'm not talking about candlestick reversals, I'm talking about these trends. They're pushing them back. All this is the swan song. If you look at my tweets earlier, I talked about the swan song. Let's just draw that in. Notice how it's popped up above there. People that might have been short here would have put their stops here or here, and it pops up. Sometimes it does a really big pop, and that's it. That's the swan song going on. We look at it on M1. Oops. There it is there. Take the scroll off. It's not totally clear that 3 swings, but let's just put 3 swings. We've got no swing 4 in there, definitely. That's swing 1. Swing 2 is the back. Swing 3 is that swan song I talk about. There it is there. This is swing 4, when you'd expect the accumulation to gather to the long side. There is no long side accumulation because they've taken it out here and here and here. This is these 3 swings. Swing 1, 2, 3. Take out the buyers, bring in the sellers. Swing 1, 2, 3. Take out the buyers, bring in the sellers. Swing 1, 2, 3. Finally take out all the stops, and it crashes. So swings within swings, internal movements, guys. I can't post all my trades because they don't all follow the rules to the letter, because I live and breathe this stuff. Alright, thanks for watching. Have a great day. Any questions, please ask them. And well, it's evening now. Have a great evening. Thanks for watching, and speak again.